Hi, I'm Kate Stalter. I get a lot of questions about gold as a portfolio diversifier, so I wanted to address some of the ways to invest in gold today, and these amount to a more strategic approach than some investors take, frankly. Now, gold is trading at new highs, and you can even buy it at Costco. That shows the popularity. So let's pause and consider some ways to invest. Instead of physical purchases, which are a hassle for many reasons, ETFs give you a more affordable, accessible, and liquid way to invest in gold. Now, these funds give you the benefits of a gold investment without the headaches of storage, security, and they allow for easier trading and portfolio adjustments. Gold ETFs are structured to hold physical gold bullion on behalf of investors. So rather in your garage, right? Which I knew somebody who did that. It's a tax efficient way to own gold. There's no distributions. You avoid potential tax consequences associated with transactions. Now, there's a lot of competition in the gold ETF space, and there's no definitive best ETF that fits everyone. But there are some options for different investing styles and objectives. Now, if you're looking to actively trade gold, the top choice is the SPDR Gold Shares, GLD. It's the most liquid and largest gold ETF, $74 billion in assets under management. And it does have a robust options chain, wide range of strikes and expirations. The expense ratio of 0.4% is on the higher side. Shares are trading around $250, so that means you would need approximately $25,000 to use strategies like selling covered calls, so something to consider. Now, for a more budget-friendly buy and hold option, take a look at the SPDR Gold Mini Shares Trust, GLDM. That's an alternative, features a much lower price per share and a cheaper expense ratio of 0.18. Now, it's not as large or as liquid as GLD, so it's best suited for some of those straightforward buy and hold strategies, and those appeal to a lot of investors. Now, those are two good choices, but if you're interested in potentially saving even more on expenses, you might consider iShares Gold Trust, IAU, has an expense ratio of 0.25%. And the iShares Gold Trust Micro has a very low expense ratio of 0.09%. Now, these are both smaller in terms of assets under management, slightly less liquid than the SPDR ETFs we just looked at. Both of these are viable for both trading and long-term investment strategies. Now, you might consider avoiding some complicated products. I'm never a fan of complication. For example, ETFs investing in gold futures contracts might mean the hassle of dealing with a K-1 form at tax time. Nobody wants that. Potentially higher fees, capital gains distributions that could complicate your tax filing. Gold miner ETFs also present some challenges. Now, these are just regular equity ETFs, right? Representing an industry. They're correlated with gold prices, but they also carry something closer to regular market risk. So you're also back to stock market correlation, which is what you might be hoping to avoid with gold as a diversifier, right? So if your primary goal is to invest in gold as an asset uncorrelated with stocks, probably better choice to look at ETFs that hold the physical gold and give a more direct and less volatile exposure to the yellow metal. Okay, as always, if you have any questions about your own investment strategy, please leave a comment below. Happy to help out.